Welcome to Unaccountable, the world's okayest game show for accounting, news, product updates, and education. I am your margin maestro of a host, Tyler Otto, and I'm joined by the Treasury Trailblazer, Jeremy Van Groll. Let's hear it for him, ladies and gents.
Whoa. It's okay. Calm down. Hey, I'm glad you called me the Treasury. What was it? Trailblazer? Can we get right into this? Because we're talking a lot of cash stuff today. So that was very apt. So we're going to start with first segment, going right into it, what I'm calling Cash Flow Throwdown. I got some hard questions for you, sir. You ready for this?
No, I'm not. Like this just jumped right. Like you just threw me in the deep end here. Usually there's a little playful banter. You know, I say how you doing. You say something witty, and then we ease right into it. But okay, let's go. Let's just pitch a shutout at me right here.
Are you saying that you feel slighted because I didn't do the foreplay? All right, we'll go going away from that. Okay, so I had a meeting with a auditor for one of my more recent clients and brought up a cool topic that I think we should talk about here. And start with this. It's about cash flow. So true or false, Tyler, there is more than one acceptable common method of preparing the cash flow statement.
False.
That would be true. So that's going to take away from our next one. Could you name them? So there are two methods of creating the cash flow statement. Can you name the methods?
Carl and Steve.
No, but I wouldn't have been able to answer this either, right? I was like, oh yeah. So there are two methods, the direct and the indirect method. And as soon as I saw this cash flow statement and looked at it, I'm like, this is different. And then we talked about it. So there's one of them that is more apt for accrual accounting. Want to take a guess which one that is?
I'm going to guess indirect because you're putting things to accounts that go indirectly there.
Absolutely correct. So as I thought about this, I immediately went and did the back in time thing. But I remember doing this in my college accounting class and how terribly hard it was. And it just brought me to this mental block of oh God, this is awful. So thought we could just talk about it a little bit because it's the first time that I've ever seen an audit that had one on it. Right. Okay. So let's talk about cash flow. Rerun question for you. What are the three sections of the cash flow?
Operating, financing, and investing.
Perfect. Which one of those do you believe is significantly different with the two different methods of creating a cash flow statement?
Well, the operating is usually just one line at the top, at least if I'm not mistaken, because that's just the single line there that talks about your net income and whether it's accrual-based or not, and then everything flows out on AP, AR, it prepaids. I'll go operating, I guess. I don't know what else. Yeah.
You are correct. It's the operating. So now next hard question. I'm laying into you today, man.
You really are. And I don't know where you're going, but I love it.
I love it. So talk me through just general, and you kind of did this already, operating cash flow section of the cash flow statement and what you typically see and what's part of that. What's the method or what are the line items you normally take?
You take your net income and then you deduct out, AP, AR, because if you had all this revenue, but you didn't actually receive it, your AR is going to offset that income because it grew and basically net your cash to zero. Or if you had prepaid expenses, yes, you had your net income look great, but you had all the cash go out for those prepaid expenses. Or your cash flow looked awful, but you had all these advanced deposits come in because that grew the liabilities, but that means you have cash in your bank account. So your cash balance can go way up even though your net income was awful. So it's teasing out all the things as to why the net income is not accurate on a cash basis.
Yep, absolutely correct. Right. And this to me, and getting back to a college analogy, I like to tell my clients is accounting 300, right? I feel like balance sheet and profit and loss, counting 100, relatively easy. Here's where the money is, goes out, balances, all this stuff. But when you get to cash flow statement, you kind of got to know what you're talking about. And can separate those of us that do and those of us who don't. And we're probably the mostly do category there. I don't try to overstate things, but yeah, right. And a lot of it is counterintuitive, right? That, hey, my AR went up. And I got to think about this in my head too, right? Every time I do it, you got to think about it that your receivables went up. That's actually bad because you didn't get the cash. My payables went up. That is good because I kept more of my cash, right? So just hard to talk through with a lot of clients and get them to understand things.
The statement of cash flow is so overlooked by most new
Absolutely.
bookkeepers because they are on cash basis. And once they start getting to accrual, they don't know how to understand it. Whereas that's when your clients get in trouble, is because they're like, yes, I had all this profit. And you had to be like, no, you are hurting because all you've done is sell, 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 but never collected any money. You are about to go out of business. Statement of cash flows is one of my favorite documents.
Yeah, absolutely. So now let's shift gears and talk direct cash flow statement. So I'm just guessing, like, again, I would have had no idea about this unless I went and looked at it. If you want to venture any guesses, there's typically about 4 or 5 sections where they break the cash into here. Want to
Wait,
take
it's not just the 3?
No, like this is just in the operating section.
Oh,
So financing and investing activities pretty much the same between them. In operating, they typically bucket it into like 4 or 5 categories. Do you want to venture?
okay. I would make a guess you would do this because it's almost like you're doing, a cash basis tax return, but then you still have to put like what the AR inventory accounts for. So I would guess inventory is one of them.
I'm gonna go no, but yeah, I think you're right. So I think like this one's hard, and I think maybe we're just gonna talk through it. But stop me. So if you think about this and you look at it, what the goal here is to do is to make this easier and more relatable to client communications and understanding cash. So typically starts out with cash from customers, right? So this would be cash coming in, right? Not necessarily revenue because we have receivables and things like that, right?
Sales tax, maybe.
Right. Yep, absolutely. And then it really much goes to where is cash going out. So the first one is cash to suppliers, right? So that's where you talk about inventory, right? Things like that you're purchasing out there. And I'm even bringing up my little cheat sheet here that I was looking at to make sure I don't get this wrong. But then the next one is cash from operating activities. So think about wages, payroll, services, things like that. And those are your 2 biggest buckets, right? And then after that, it's cash for interest or cash for taxes, right? So what the goal of this direct one is to make it more relatable that the client or the business owner would know like, oh yeah, that makes sense. I had cash from these revenue or the sales. This is what I paid for inventory, other materials. This is what I paid for operating expenses, paid for taxes, paid for interest.
Interesting. Because this sounds to me almost sounds like a modified P&L on cash basis, which it kind of is. I don't know about you, and maybe this just shows my my lack of remembering college. But like every time I've looked at a statement of cash flow since college, it's been on accrual basis because that's what the corporate software we used did, and that's even what QuickBooks does. And I've just saw what Diz done. Yeah. Sorry about grammar there. But I always just assumed like there was one format. So this is news to me. I'm kind of intrigued that you're getting audited on this modified basis.
Would you like to expand on why you can't remember college? No, let's talk about this some more. I agree. First time I'd seen this, right? And the accounting of the books are still in accrual basis. They just take and make the cash flow this way because when the client engaged them initially, they talked through the 2 methods. And I don't even know if accountant like auditing firms typically do that because I know I've started audits with some clients and not had that conversation. They just default it's the indirect, you get it, right? But I think they had that conversation and the client felt it was cleaner to them and more understandable and relatable that they could say, again, nonprofit, this is our cash from donations or services we provide or whatever. And then what we're paying for any materials inventory, what we're paying operating expenses, taxes, interest, right?
Interesting. While I like learning new things, I don't like this. I don't want to have to teach my staff or anyone else like there's a different method other than what we do.
Yeah. And I don't think, and you are like my software go-to, and you're my go-to for so many things, Tyler, but I don't think I have heard of software.
It's a different podcast.
Any software that would do this, right? That like you could have this option and create it because I remember doing this in accounting once I looked at it and it's hard, right? Like you think that the balance sheet one or the normal indirect method is hard. It's really not. You just need to know working capital and the changes in it, right? And you can get to it relatively easy. But this one to like bucket it out the right way was hard. And I don't remember the why hard, and I'm not going to go do this again. I will not, especially not in January. But yeah, I don't even know a software that would do this for you.
I mean, you would have to go build it manually in LiveFlow or Data Rails or Reach or somewhere else like that. Because I can't think of any software that gives this as an option. And to be honest, I feel like a lot of CPAs, they probably wouldn't know this answer either. And they would be like, what is this statement? Like, get this out of my site.
Yeah. And even that auditor said, like, this is harder to do. And we have to more or less do an indirect statement first and then like do the things to convert it to direct. Yeah, and that's when I went through my fear from doing this activity in college. But do you think is there an opportunity here for a software to be like, your clients do not understand the cash flow statement. You know this. Hey, there's this other method. It's correct and accurate, and they may understand it better. I don't know. What are your thoughts?
I see your point that no one's in this space, but I do not believe there is anyone that's clamoring for this to pay for it to justify a company spinning it up. You would have to have almost the full set of books or pull it from QuickBooks, but man, it would have to be a cheap extension unless because it has to deliver some sort of value. I could see, one of the big reporting beasts out there just building it for you and having it as a template, and that could make sense. But I don't think like there's a space for someone to just come in and fix this one issue.
Yeah, I don't think you're wrong there. I have one or two clients that are really want me to walk through the cash flow statement with them each time. So they can understand it and grow their knowledge on it and whatnot. Having it that other way would be easier for me to probably explain it to them, right? Because the terms are just more straightforward, right? But again, I don't like it either. I was curious. This had me go down a whole rabbit hole having this experience about, wow, I just completely forgot all about this, and let's learn about it and talk about it.
Well, thank you for sharing your January PTSD traumatizing events with us.
Anytime.
Jeremy, I'm excited because we now get to invite in our guest for this episode. And I want to point out, Jeremy, as you have said in the past, we are highly corruptible. Like, we will accept money from anybody. But that's not completely true because, once we started this podcast, we actually get random softwares reaching out a lot, just saying, hey, we want to be on your show and we'll charge you X amount. No. But I will say we are bringing on one of our friends, not because that she works for one of our favorite softwares, but because she has become my friend over the last 2.5 years we've worked together. In fact, when I go to conferences, their booth is basically my home base to come back to when I've got no other vendors to go visit. So I wanted to welcome to the episode Deanna from Relay. Deanna, welcome to the show.
Thank you both so much for having me. And honestly, it is an honor to be introduced as your friend, Tyler. So thank you for that.
You clearly have bad judgment like I do.
Don't hold it against me, Jeremy.
Right. All good.
The Relay crew is my favorite crew because at QuickBooks Connect's last couple of years, you guys are the ones I look for, and we don't talk accounting at all at the after parties. We just hang out and grab drinks together. The Relay crew is my favorite crew.
Yeah, it's like a breath of fresh air. We don't come to talk business.
No, we don't. But we did invite you on today's show because we do have a love for Relay and we have a love for banking. In fact, that's Jeremy's whole background. So I figured, you two can now become friends. This whole triangle of friendship becomes complete. Plus, we get to run you through the gauntlet of fast figures.
Awesome. Jeremy, I don't think we have a choice. We're friends forever now.
Should I be so lucky?
Right way to look at it.
Yeah.
Welcome to Fast Figures. 10 questions, 1 minute-ish. All answers are numbers. The game starts now.
All right, Deanna, we're going to put 1 minute on the clock. Are you ready?
I'm scared, but I'm ready.
Here we go. According to the Profit First method, what percentage of your profit account do you distribute to owners every quarter?
Ooh, this is going to look really bad if I have it wrong. Let's say 50%.
How many dots are there on a pair of dice?
46.
I like that it was at least an even number. Unless specified otherwise, how many months is a typical check valid for?
Ooh, 6 months?
Within 5 years, according to the federalreserve.gov, what is the average estimated lifespan of a $1 bill?
We don't even have $1 bills in Canada. Okay, 10 years.
With traditional ACH transfer, most banks would process transaction in 3 days. With a 2016 update by the National Automated Clearinghouse Association, an ACH can be as short as how many business days?
1.
It is the year of Summer Olympics. How many times has Canada, your home country, hosted the Summer Games?
Oh my gosh, I look like the worst citizen. 4.
The Federal Deposit Insurance Corporation, FDIC, insures depositors at any insured bank up to what amount? Single bank.
A single bank, $250K.
How many basic feet positions are there in modern day classical ballet?
5.
Within 10%, according to a study by the Cyber Readiness Institute, what percentage of small to medium-sized businesses do not implement 2FA?
30%.
Since you are Canadian, I have to test what you know about us Americans. How many states are there in the United States?
52.
And for a bonus point, do you think Jeremy can successfully answer the question, how many provinces and territories are in Canada?
I don't. I just met you, but I don't.
I'm going to go 9.
All right.
Ooh.
Deanna, how are you feeling after that?
I feel like I was cyberbullied, to be honest.
Pretty accurate description of what's going on here.
Here's what I will say. Only one person has ever pitched a shutout in unaccountable history, and it was Jeremy pitching at me. So you've already, I'm going to spoiler alert, you've exceeded that.
Yeah.
I'm scared. I don't even know the results. Is that part of this? Do you tell me how bad I did?
Oh, yeah. We're talking through it right now. Yeah.
Oh, okay. We'll wait for that.
Yeah, as you can tell, guest, Deanna has not prepared for this at all. She has never listened to an episode.
We were going to let that slide, not say anything, but you outed yourself there. So now we got to talk about it.
I did. I mean, Tyler said it. I wasn't going to say it once we were recording, but here we are.
And now you're going to go back and listen to all of them, right?
Now I will. Now I'm the biggest fan, 100%.
Yeah.
Got a new subscriber.
All right. So let's jump into it. Question 1, according to the Profit First method, what percentage of profit account do you distribute to the owners every quarter? You answered 50%.
Ooh, is it?
Correct.
Nice.
Oh, God.
Standard methodology, every quarter you let that profit account build, and then you give half of it to the owners and let the rest build up. I bring that up because Relay, you guys scored a big partnership last year with the whole Profit First crew.
We sure did. Yeah. Last April, we made it official that Relay is the official banking partner of Profit First. And it's been a really big deal. We've gotten so many more businesses to come under Relay after that. It's crazy.
And what set you guys up is Mike McAllowitz and crew would look at you guys and say, hey, you guys are the ones we have to work with. What features, what is it that you guys had?
Well, it's funny. Ron, one of the creators of Profit First Professionals, always says that they kissed a lot of frogs until they got to Relay, entertained a lot of banking relationships. And I think Relay just naturally has always been a great fit for Profit First. Just you've always been able to have 20 accounts. That is just part of our makeup, and we don't charge for any of them. That's usually one of the biggest roadblocks. And I don't think they successfully found that with another partner. So that part was easy. And then now they give us their own feedback of what we should implement, and we actually implement it. So it furthers and deepens the partnership, I think.
I friggin' love the Profit First model. It's worked with our clients. Jeremy, you use it with a chunk of yours as well, right?
We have a handful with nonprofits. It's a little different, right? You don't have the ownership thing, right? So we do it with one or two of ours, but yeah, not widespread. Did you guys check out his new book yet?
I have not, but it looks like you have.
We sent one of our people to the training or thing, and we got 20 copies. I can send you guys a copy if you want.
Absolutely.
All right, coming in the mail.
And Jeremy, because this is a podcast and you held up a book but didn't give us the title.
All in. How great leaders build unstoppable teams. Yeah, and you
We're
get
still
a book.
learning how to podcast.
You get a book, and you get a book.
All right. Question 2. How many dots are there on a pair of dice? You said 36, which is actually a really good guess, but the correct answer is 42, right? You got a 6 and 1, a 5 and 2, a 3 and 4. So those are pairs of 7, and you have 6 pairs of 7, 42. There's your answer.
Yeah, my math is not mathing, but that's okay.
I thought it was high. So I would have got that wrong.
I wish we could have done it back and forth. So I answer and then Jeremy answers and we see who actually got it right.
Well, I make a fool of myself enough on here. It's time somebody else.
You're good.
Next question. Unless specified otherwise, how long is an average check valid for? You said 6 months. And that is correct. So yes, 180 days to be exact, but let's round, unless they put on their void after 90 days. You guys, you have implemented check payments as well. And the one thing I love about it is not having to wonder if something's still out there. You guys even now put that pending balance for bank account for transactions that are still out there in the world. Has that been received well since you guys rolled that out?
It has been, because we changed it before. As soon as you sent out that check, it was deposited from your account immediately, and we switched it on the newer version of Relay. So it's not taken out until it's deposited. And I think people just appreciate that a little bit more. They kind of understand exactly what's going on. And it's more clear on the bank feed. They've got better visibility. So yeah, it's been received pretty well.
Jeremy, since we talk about the accounting side, I'm just curious, if you have clients that are sitting on checks that still haven't been cashed, how frequently are you sheeting to the state, if ever? Or are you just telling the client eventually they need to do that?
Yeah, we haven't, honestly. Like, I'm big with my team, like, follow up after 3 months, right? And like, let's hammer that and let's get this check taken care of, not let it hang out there.
Yeah, because nobody wants to escheat it to the state, and essentially the client comes back one day and says, "Where's my money?" And it's like, it's already gone. Got to go get it.
Oh yeah, absolutely. That's a tough conversation.
Oh yeah. Next question. Within 5 years, according to the Federal Reserve, federalreserve.gov, what is the average estimated lifespan of a $1 bill? You said 10 years. The correct answer is 6.6. So you're within 5 years, correct. And I thought that was interesting. $1 bills, it seems to die out the quickest at 6.6 years. But meanwhile, Benjamins, those $100 bills, 23 years on average. Who'd have thunk? Now, you Canadians, you just got coins you're chucking at everyone. You don't have to worry about this, do you?
Exactly. Just throw them right at everybody in any use that you can think of.
Did Canada ever have a $1 bill, or has it always been a coin?
Not since I've been alive, but I don't go back in the history books.
All right, interesting. Yeah, when you said that, I'm like, I did not know this. Man.
Yeah. That's why I felt like it was a trick question. I felt that was intentional, but maybe it wasn't.
Doing great. Next question. With traditional ACH transfers, they used to take up to 3 days from the 2016 update. How quickly can it be now? You said 1 day. I'm going to say technically no, it's 0 days. It's same day. It's not next day.
You're right. You're right. You are right. I was thinking about, because in Relay, we offer the basic, for free next day. So that was on my mind. I wasn't thinking about same day. You got me.
Yep, which you guys also do offer for the paid Relay account, Pro account. You do offer, which we're going to get into some cool things about Pro after the game. But that same day ACH, that has been awesome to not have to pay wire transfer fees with our clients for other banks.
Makes a big difference. And because other banks or banks in general can charge so much for wires, even if it's just domestic. So if you can ACH, it's always better than a check, than a wire, anything.
Yeah, amen.
And dear listener, if you think this is a pup piece for Relay, they're not paying us to interview Deanna. It's just I had to come up with questions I knew that we could talk about. So don't judge me. Which leads me into the letdown here. It is the year of Summer Olympics. How many times has Canada hosted the Summer Games? You said 4. You're getting really generous there, Deanna. It was once, Montreal in 76. But you did get the winters twice. So that was cool.
I feel like that makes more sense in Canada to have the winters more than the summer. But yeah.
Do you even get summer in Canada? Because we barely get summer in Wisconsin, I feel like.
Actually, fun facts. I was looking up trivia questions. Which of you is further north, Toronto or Appleton, Wisconsin?
We are, because dips down there by the New York stuff, yeah.
So you might be a little bit colder, Jeremy.
That's true, yeah.
Next question. Federal Deposit Insurance Company insures depositors at any insured bank up to what amount? You said $250,000. That is correct. But Relay and several other banks do a sweep program, and there's multiple sweep programs out there. There's some that do like they move your money in a sweep program to invest it, but yours is a little bit of a different sweep one. Can you explain what that is?
Yeah, so this was something we launched last summer, which we were super excited about. And Relay now offers up to $2.5 million in FDIC insurance. And that means that we work with 10 other partner banks in our network and sweep the funds to their partner networks just to hold. Everything you still see in Relay, you can access it whenever you want. It's just simply being insured elsewhere. And we've got really great response. It means so many more businesses can use Relay, even if you're just parking your funds there. And I think we've all learned something in the last year almost where you should have multiple banking relationships just in case. So it's been a great resource.
I mean, Silicon Valley, none of us would have thought people were going to lose all that money. Now it's like, okay, this matters.
Yeah, I used to scoff at that too and be like, what is this really going to happen? And then, the whole West Coast bank issue. I also like this, we get audits for a lot of our clients too, and the auditors will call this out is that, you have a balance of $400,000 at this bank and that's risky and whatnot. So it's a cool option to get rid of another little tidbit that the auditor thinks is important.
Yeah, especially with nonprofits too, if that's who you primarily work with, Jeremy. Sometimes you can sit on a huge grant and you want to make sure that it's fully covered, right?
Yeah, absolutely.
Next question. How many basic feet positions are there in modern day classical ballet? You said 5. And you are correct. And the only reason I bring this up is because looking at someone's resume, they're a dance major and now they're in banking.
that what all dancers do? That's the natural progression.
I know some dancers that hold a lot of cash, but I didn't think that was something you could major in school.
I'm not going to touch that one.
Wow.
What's the question here, Tyler?
How did you go from dance to banking?
Oh, goodness. So dancing, I never had a career in it. I went to school for it because it was my passion. Love it then, loved it now. And I'm a big believer in you should go to school what you're passionate in. I don't think that usually translates to what your career is. I think people kind of stumble into some things. And anyways, after I graduated, I was like, I need to make money. I got into retail, worked my way up in retail management. I worked in retail management for 7 years, and my goal was to manage multiple stores after managing one, and then COVID hit. And I worked at the biggest mall in probably in Canada, but definitely in Ontario. And that was no longer an option. So I'm like, what else do I do? What else is out there for me? I'm going to try B2B sales since I've always been in sales. Got connected with Relay and haven't looked back. Been here for almost 3 months now by the time this podcast comes out.
3 months, 3 years.
3 years. Yeah, sorry, 3 months.
Wow.
I'll cut that in. It's 3 years.
Yeah, got it.
Yeah, so I never sought out banking. When I connected with Relay, it was the people on the team that had me interested and what they were putting out into the world. And so that's how I got into banking. It was never intentionally into banking, but here I am. So
next question. Within 10%, so you have a 20% window here. According to a study by the Cyber Readiness Institute, what percent of small to medium businesses do not implement MFA? The correct answer was 54%.
Higher.
Much higher than that 30%, which is terrifying because the amount of cyber attacks is on the rise. But you guys, I also realize, annoyingly stop me so frequently from logging into my Relay without confirming who I am. Do you find that it's hard to get customers to sign up for that?
It's not hard because we mandate it on Relay.
Oh, perfect.
Yeah. And something that's really great about Relay too, whether you're their accountant, their bookkeeper, or just an employee, you have your own login. You don't have to share logins here. That's actually where people get into trouble on Relays if they share logins. And I'm like, you don't have to do this. There's another way here. And then once they have their own login, then everything's golden. But yeah, we mandate 2FA, so not an issue.
I think that's brilliant because too often we just hear of clients, dumb things, someone gave up their credentials or somehow a hacker got them. So I absolutely love anyone that forces their client to protect their information.
And you should, especially around your money, right?
Exactly. Last question before our bonus. Since you are Canadian, I had to test you. How many states are there in the United States? You said 52.
What?
It's 50. We got 50. It's a nice round number.
We do like DC and Puerto Rico here, or what's going on?
You have like Alaska. Is that included in the 50?
Yeah, we got 48 in the lower. It's called the lower 48. And then we got Hawaii and Alaska we tack on to the side.
Me too. Oh, God. Okay, well.
But I did ask you for a bonus point. Could Jeremy successfully guess how many provinces and territories there are? Jeremy, you said 9 earlier. I'm going to let you get one more guess.
No, I'm sticking with 9. Obviously, it's not right, but I'm not changing.
Good for you.
I will say, Deanna was right. You did not get it right.
That's right. Dang it.
Deanna, if I'm not mistaken, 13, right? 10 and 3?
Yeah, we say provinces and territories because there's territories up above. But yeah, 13.
Wait, what's 10 and 3? What's that's the breakdown? Provinces and territories? There's 10 of one and 3 of the other? Okay. This feels like a trick question.
Yeah, all my questions felt like trick questions.
Yeah, that's right. It's part of the game.
Well, 6 out of 10. You have to know we aim for mediocrity in this podcast. Like, that's where we want to be. So if you're sitting right at our tier, it's like you came in, met us at our level. Very proud of you.
I feel part of the club. Thank you, everybody.
Right on par. Well, with that sound, it is now halftime where we go to the benches and take a bite out of an app. And surprise, what our app might be today. You guys at Relay actually have something really cool coming up. Would you like Deanna to kind of regale us as what we're getting next month?
I would love to tell you. Thank you so much, Tyler. Yes, we're very excited over here at Relay, and it's because we are revising our partner program. So on February 6th, we are relaunching it. And the idea behind this is we wanted to support our advisors that use Relay in a more meaningful way and continue to support your advisor-client relationships. And the idea behind this is we're going to keep the good stuff from the previous partner program and add in a bunch of new. So what we're keeping is, of course, the business banking stays the same. So it's truly business banking built for you and your clients. That doesn't change. And you continue to get your dedicated support. So we help with white glove onboarding, and you get your account manager. Tyler can tell you exactly how well that's worked out for him.
I mean, sometimes I pine for Bernardo, but that's other reasons.
Don't we all?
I'm so offended. So that's what's staying the same about the partner program. And then what's new is we're now giving predictable and transparent partner rewards. So we're going to give you a flat dollar amount every time you add on a new client. And if that client hits a certain threshold in their account, you'll get another reward, which is awesome. And we're going to continue to give that pro discount and pro for free for advisors. But we're also launching an advisor directory. So this is super, super exciting. Relay gets tons of small businesses that are saying, what accountants should I work with? Do you have a recommendation? And now we can be like, yes, we have many. And so you'll be able to search by location, by industry. So we're super excited about that. And lastly, we're introducing an ambassador program. So a lot of people, just like you guys, have a community that you speak to and want to talk about these super cool apps or softwares that you find. And so we'll help support you to do that, whether it's paying for a sponsorship, sending you over stuff. So we've got a lot of stuff going on with our new partner program. We're super excited about it.
Well, and you guys talked about this to a small community the other day. Great webinar, great stuff happened on that. And one of the most exciting items I saw, though, is we're already selling to our clients Relay. Like, a lot of us are just saying, hey, make our lives easier. Let us have a bank that we can get the access, provision it for our team, help with what we need to if we're doing bill pay or not. Like, just let us get the info we need. But then a one-time cash reward of $100 if you have 3 to 19 clients, like just $100 for signing up my client, or $50 on that tier, that's your silver tier, $50 if that client holds over 10K balance. Like, I'm just stoked to get free money just for the fact of just doing what I'm already doing. So it's not like you guys are coming to us and saying like, hey, if you do X more, then we'll start making it worth your while. You're coming to us and say, hey, we know you're already doing this, but now we're just going to give you cold hard cash. That's awesome.
Yeah, nobody will, put down cold hard cash, but that's what I think the joy behind this idea is. You're referring Relay because of how it allows you to work in your firm. You're more efficient. You get time back in your day. It's for those reasons. And you get a better relationship with your clients, right? You're bugging them less. You get the information you need. You spend less time on it. All the friction is removed. That's the real prize there. This is like the cherry on top. It's like, oh, you're going to talk about Relay? Bring us everybody, and we'll bring you some cold hard cash. So yeah, it's really, really cool.
The only problem you guys did, though, is you said this program kicks off February 1st. So we only get credit for clients we sign up starting February 1st. So I'm sitting there like Braveheart holding back my troops saying, don't sign up yet. Don't sign up yet. Hold. January sales are going down with me.
February 1st, I'll be trampled. Is that what you're saying?
That's exactly it. Like, I'm telling my clients like, don't worry about Relay. And then February 1st, I'm gonna be like, now.
Yeah. January 30th. I don't have a bank referral for you. February 1st. Boy, do I have something interesting for you.
Exactly. Because, man, $150, that buys a lot of lattes. So, no, exciting.
I have selfish questions.
Okay.
Question number 1 is, you said with different tiers, there are different thresholds that you could meet for that. Was that like the balance that you said? If you're at a 10K balance, if your client has that, then you'd get a different payout versus less than that?
So the balance payout is separate. Basically, if you're on a different tier on Relay, the higher tier you're on, the higher your payout will be per account that you bring onto Relay.
Okay. Yep.
And the 10K balance is the same for everybody.
And the other one is how, like, you brought up this partner program to help promote accountants with it, which I'm super excited about. That'd be awesome. How does one in a specific niche get to be at the top of the list? Because I feel like when you look for nonprofits, you should see Jeremy Van Groll. And when you see hotels, you should see Specialty Bookkeeping and Tyler. Maybe it's just for us, but I want to know how I get to the top of the list.
So that's a great question. And I don't totally know how they're organizing it. I would think that it'll start alphabetically if I had to give a guess, but then we're going to have people on the main page, and it's not something you can apply for yet. But if you want to be on that front page, I might be able to talk to somebody.
All right, I would love that. Also, let me know if I need to change my name to AA Jeremy or AA Van Groll. So I'm one in there too.
You'll go through an official name change to be at the front of our advisor directory. That's on here.
Absolutely.
Yeah, I've done more for less. I think.
Some fake girls in the audience today, I think.
Right. Love it.
Well, Deanna, we're stoked about this program. Like, again, we had you on here because you were a friend, but B, like, I love this because it's not really like, you're trying to incentivize to sell you guys more. You're basically just telling a lot of us that already use Relay and love it, hey, we're just giving you cash back. That's what I heard. So I'm pumped. I'm glad you could come on the show. Any last thoughts before we boot you out the door?
Before you kick me out. No, thank you both for having me. This was definitely a fun way to spend my afternoon. So I appreciate it. And thanks for letting me talk about Relay. It doesn't feel like work when I talk about Relay, and it doesn't feel like work when I'm talking to you guys. So thank you very much for having me.
Thanks, Deanna. We'll talk with you later.
Yeah,
Bye.
thank you. Well, that was awesome. All right, let's move on to our next segment here, Tyler. So we're getting into tax season, right?
Yes, sir.
And you are one of the crazy people that do those. God have mercy on your soul.
And rethinking it every day. We actually fired a bunch of tax-only clients this year. Not worth it.
Yeah, oh, I believe that. So everyone's thinking of how you can save money in tax, right? So
Yes, sir.
Two common tax advantage accounts that people utilize are the HSA account and the FSA account.
Correct.
Could you please unacronym those for me? Is that a word, unacronym? I'm going to make that a word. Unacronym it.
I understood what you meant, so therefore it's an accurate word. Yeah, a health savings account and a flexible spending account.
Right. You didn't even wait for me you knew this. Like, I'm getting that cha-ching in there right away. All right. Do you want a quick overview of each of them? Like, what do they do? What are they used for?
HSA, and someone's probably going to get after me on the mouths because I can't remember off the top of my head, 7,200, 7,600 for married family. But essentially, it is money that if you are on a high deductible health plan, you can qualify to put money into the HSA that then sits there tax-free. And as long as you spend it on eligible items like healthcare or healthcare supplies, then you can spend that money and never pay taxes on it. It's a nice little get $7,200 out of your business or even out of your paycheck that is tax-free. And that's something that even W-2 earners can do, which a lot of the tax strategies out there aren't really available to W-2. So this is a good one for everybody.
Yeah, totally
And
agree.
with the HSA, it grows in perpetuity. So as a young 20-something buck, like if I look back to those days, I would contribute to the max and I didn't use a penny. And then we spent that entire thing when we had our first kid. It was like years and years of me saving up. So it's great that the HSA rolls over.
Yeah, and you were early on the train then getting on that, because this is one, like, after you maximize your revenue, match your 401k to get all that revenue, this is often considered one of the best options for then saving tax and growing, because this money you can put in an investment account too. That's one thing that people don't do. You don't have to throw in a savings account and make it out there. Put it on the market, let it do its magic, right? We all know long-term market goes up. Yeah, so that's pretty cool. Great answer. I love how smart you are, because I just feel like I would get this question and I'd be like, Tyler's going to knock this out of the park. I'd fail. But all right, let's go to FSA. What about that one?
I know less about it because I've used it as much. I know FSA has a lot more restrictions. It also, if I'm not mistaken, is a use it or lose it sort of policy, where at the end of the year, it does not roll over. But you're looking at me like I'm crazy. So now I'm second guessing and just going to take a sip of water.
No, that's also smart and accurate. And exactly where I wanted to go with this, which is why I labeled this segment as forgotten, surrendered, Awshucks. Right?
All
FSA.
right.
That was my unacronyming that one for you. So yeah, this is right, and something where your employer can put money in there for you, and you can as well, if I'm not mistaken, right? But it is a use it or lose it one, right? And so right now we'll get some maybe fast figures-esque questions. Are you ready for some of those?
Sure, hit me.
Let's do it. But this is not going to be near as entertaining as Deanna was anyway. So anyway, according to money.com, what percent of workers forfeited at least a portion of their FSA funds? And I have 2019 and 20. If you want to, I'll give you like ballpark.
60%.
Surprisingly not that high, but 44% and then 48%. So almost half of people have forfeited money in this the last time that they reported out on these figures, right?
That's why FSAs are so hard, because, you're at the end of the year and you're like, all right, I guess I'm going to buy a ton of gauze and Ace bandage wraps because I got to spend it on something.
Yeah. Another point I wanted to make is most of the time it's the end of the year, you have to spend it. But some employers, while we talk about this now, is they give you until March 15th to spend this money. So like, if you have one of these, go look at your account. If not, go spend some money. And I'll get back to that in a second. What do you think was the average amount forfeited by an individual?
$800.
Again, high, but $340 to $400.
That's not nothing.
No, like that's not nothing at all. And so if you take that and all the people, how much was this in total for those 2 years?
Okay.
For compounding. Whew.
Oh,
There's no way.
I'm just going to throw something out. 980,000.
$3 billion in 2019 and $4 billion over that in 2020. And 20, I see the growth too. If you had COVID, right? People were staying home. There was probably less medical things, or unless you really got it badly. But that is a little bit of coin there, huh?
That is absurd. So, I mean, how do our listeners, who are doing taxes and whatnot, like, yeah, we're always asking the question, do you have an HSA? Are you putting anything in there? Like, that's what we always ask. But I didn't realize to think like maybe we should be asking as the FSA just to remind them, spend that money now.
Yeah. Yeah, I would totally agree with that. And maybe I don't know tax software and the questions that you have there, but if you're doing that early in the year, like, do you have an FSA? Hey, go check when your due date is, and if you can spend it, because there's so many options to spend this on, right? Like you can get glasses, you can get, like dentist things and bandages and whatever else you need that can be remotely related to health that you could stock up on and spend and use this money for, that it doesn't go away. Because if it goes away, it goes back to your employer. So, I mean, I know all of our employees love their employer, but some people don't love their employer that much.
Well, and this is also a great way just to give a little bit more value. If someone in here is just doing taxes and your client has an FSA, you're not helping them with it or anything, but you can set up in whether you're using Keeper, TaxStone, Carbon, any of these things, you could just put a flag that, oh, they have an FSA. Now in December 1st every year, you can have an automated email that goes out that says, hey, reminder, we know you have an FSA. Make sure you spend it before the end of the month. So you're not even flirting with that line. Like there's a lot of things just to deliver small value. This is a good reminder.
Yeah, absolutely. So go check that out.
All right, Jeremy, on to our next game, which affectionately today I'm calling the Lowdown on Updates, where there's a few updates in the industry that I feel our listeners should know about, and maybe you too. Ready to play?
Ready as I'm going to be. Let's do it.
All right. What tax task flow management platform just released an open marketplace where you can publish your templates and get paid by your peers who choose to use your templates?
I do not know the tax things very well, but I know you like TaxDome, so I'm going to go with that one.
You are correct, sir. Yes, TaxDome, they are now making it easier than ever to publish your good work and also receive rewards for it. And I think it's in an effort to incentivize people to collaborate, which just makes sense because there's several different providers out there that teach programs on like how to manage a workflow, and they always want to collect money. People don't want to share everything they've built for free. So this is encouraging you to put out your best practices and let others benefit from it. I don't know. How do you feel if more softwares adopted this model?
I don't hate it, right? Because like somebody like yourself and me in a former life, maybe like you can build out cool things that are really useful and have monetary value, right? And is it a workflow? Is it a form? Let's make sure I understand the clarity of this.
It's your workflows. So in TaxDome, for those that aren't aware, I know I've said this for a while, Keeper and TaxDome need to have a baby and it would be my favorite thing ever. But TaxDome has mastered the workflows or client organizers if you have to ask some questions, and it's almost like content snare built into TaxDome. So like you can copy all of those or templated emails or really anything can be templated.
Okay. I like that. Fun fact that I don't think I've shared before. I have an Etsy channel with a couple of spreadsheets I made on it. So if you're interested in a mileage tracker or like a calendar that'll update for you all the years you can do things, what is it? Spreadsheet My Life on Etsy. I think they're like $5. Every like 2 months and a couple of them in the beginning of the year, I'll get like $5 sent over. And I'm like, win!
Link in the show notes.
That's right.
Jeremy, question 2. The IRS, or if you weren't aware, the Internal Revenue Service, unveiled a simple notice initiative Tuesday which aims to do what?
A simple notice initiative, which aims to inform people that they still have not gotten to whatever document you sent them yet.
I mean, not really, but I'm also going to give you credit because we're simplifying things here. The IRS has an initiative to simplify a bunch of the notices going out last year. They show some examples from this article from Accounting Today, where some of the IRS's notices for, that ugly font, I can't even remember the name of it, when you get your tax ID notice and like it's a 60-page notice that you can get. They've worked on simplifying those down. And one of my favorite quotes from this is, the agency shortened the Form 5071C notice from 7 pages down to 2 pages and increased the readability by updating the font, adding visuals such as headers, icons, and even step-by-step instructions. Who thunk? The IRS is now actually going to tell you what you should do next, or lay it out very clearly as to here are the sections of the notice, what you should know. They actually made it readable. If they keep doing this, our clients may not have to send us every letter they get from the IRS saying, what does this mean?
They may not have to, but they're still going to. They're not going to do that themselves. That's wishful thinking. But that's cool. Step in the right direction, right? Like I had in the back end of the January song, right? IRS, thanks for no guidance on that clause, right? Give us some concrete directions. Even those of us that know some IRS speak, some a little more like clear directions would be very much appreciated.
Absolutely. Question 3, Jeremy.
Yeah.
The FTC has banned Intuit from advertising TurboTax at what price?
That would be free. I did see this one.
Yes. According to a spokesperson from the FTC, TurboTax engaged in deceptive advertising, and Intuit was ordered Monday to stop advertising any free products and services unless they're free for all consumers, or unless the company discloses on the ad the percentage of people who would be eligible for the unpaid offerings.
I feel like other organizations are still doing that too. And they go after like Intuit first because they have the elephant in the room and now like other people got to fall in line? Or is it?
Or is it that Intuit last year took out Super Bowl ads and the entire ad was free.
That's right.
Yeah, and as the commission has long understood, to quote, free is a powerful lure, one that Intuit deployed in scores of ads. Its attempt to qualify its free claim were incentive and often ineffective and often inconspicuous.
And shady. It is free for, what is it, like the federal filing that's free typically, and then they give you, like, you have to pay like $100, $200, something for the state filings, I think.
Yeah, well, and then it's really like for the 1040 easy, if you require anything else, it instantly upgrades you, but you only find that out once you've done all the work to go through, do your tax return. And now it's like, well, you can either pay us or go do all this work again with someone else. And people are like, oh, fine. All right, I guess I'll just pay this because I'm already here.
Right. Yeah. I would do the same thing. Yeah.
Well done, sir. 2 more questions for you. First, firm management software Carbon has released a much awaited feature, which comes in the wake of QBO removing their $10 cap on ACH fees. What feature did Carbon release?
It's got to be some kind of subscription payment processing.
Not even necessarily subscription, just general billing and invoicing.
Okay.
And this is huge. I know several softwares, TaxStone, we already mentioned, they do allow you to process payments through there. But not everyone in this space allows you to process payments for your firm. Carbon's taken a huge step here, especially because their ACH fees are 1% plus 0.3 per transaction, but it's capped at $5. So when QuickBooks just removed the cap and clients are starting to get a little bit angry because they're getting those huge fees, Carbon now is making it a very nice landing pad for any of their users to move all their billing over to Carbon. This was a great move by them. And it just makes me wonder if other firm or task management softwares are going to follow suit.
Yeah, I agree. And that was why trying to change the stuff isn't drop of the hat, right? Like, it takes effort. You need to communicate to clients. You often need to get banking information again too. But that removing that cap was it the jumping off point that we needed. They're like, I'm done, right? So we're moving everything to Pluto. I think we got 90% of our clients done over there. And this is the first month in February saying, hey, you've had 2 months to do this now. If you don't do it, here's the fee you're going to get that's going to cover QuickBooks. So yeah, it's a good call by Carbon.
We moved over to CPA Charge just because we've had them for a while. TaxDome integrates with them. And it's the same thing because, like, we're not willing to pay the fees anymore. I think I'm saving $400 a month just by getting off of QBO.
Absolutely.
Last question for you, and this one caught me off guard. But which company quietly announced a new product offering in January called Solopreneur, right after they released their other offering, Ledger.
Oh, because I know the Ledger one. That's got to be QuickBooks too.
Yes, I don't know if you saw this. I was hunting, just looking through the Firm of the Future posts they put out every month, and it was talking about updates. And they talked about revenue recognition. They talked about a couple other features. And then buried down in there is a new Solopreneur offering, which it looks like is going to be cheaper than Ledger. And accountants cannot offer this product, nor can accountants connect to Solopreneur. So right after they throw us this bone that, hey, we're going to give you a cheap product to get your clients on QuickBooks, they're also releasing one to the general market so that we can't access those clients. My guess is this is a giant play to keep pushing QuickBooks Live. If a client wants to go to an accountant, they have to get off the cheap Solopreneur option.
Yeah, that is kind of shady too. Might be my word of the day. But also, like, yeah, nice that they have that cheap option, but how many people are going to screw this up? Right?
Yep.
Like, I'm not saying what we do is rocket science, but you have to know what you're doing or this snowballs really quickly. So now you're putting this tool, which is probably a decent tool for what they need, into somebody's hands who don't know what they're doing, but like, hey, $10, I'm going to figure this out, right? And just going to cause all sorts of messes.
And they haven't even announced the price. My guess is it's going to be pretty darn cheap. But Jeremy, how often during your workflow you're consulting a client and they're like, hey, I'm on QuickBooks. Like, great, give me accountant access. I'll let you know what we need to do, what we need to be fixed up. We can't add this to our accountant profile. We can't even do a triage now to quote someone. Only QuickBooks Live can.
Yeah, that sucks kind of. But yeah, all sorts of problems. And again, maybe those people who take the time to learn it, right, and have small micro businesses, and this will be sufficient for it. But if anybody has aspirations to growth and all that stuff, it's going to be a nightmare if you're not going to put in the time.
Well, Jeremy, I'm proud of you. 5 out of 5. Let's not have this happen often, or people are going to think that we are actually experts at what we do. You had a little bit of help.
Yeah, I think you were gracious on a couple of those positive answers, but no, I'll take it. And then, let's transition right into our winner of the week, which I guess I won't be the winner of the week, but kind of, because I want to talk about entrepreneurs being the winner of the week. Did you see this article that came out just this week about the first billionaire? Do you have a guess of who that would have been? The first billionaire ever in the world.
Okay, so it wasn't recent, because we've had a couple billionaires. I mean, I would assume it was like Gates or Buffett or Bezos. One of those?
John D. Rockefeller in 1916.
Okay.
He was the one who pretty much had a monopoly on the oil. But kind of some interesting things that came out of this article is, first of all, he had trained 10 weeks in accounting, and one of his first jobs was a bookkeeper, right, where he earned 50 cents per day.
Oh, so yeah, the same rate we earn now.
Pretty much, yeah, right? Well, especially January, I got 100-hour weeks in, might as well just average it out to 50 cents per day, right? But the one stat here that I loved is that by the time he died in 1937, his assets equaled 1.5% of America's total economic output. Can you imagine what that number is? Oh man, it gets ridiculous. But just again, you don't need to, just got to have a good idea, run with it, be a good manager, and those entrepreneurs you can really take off.
Yeah, so you can start as a bookkeeper and go on to own 1% of America. Easy.
Yeah, that's right. Great. All right, then let's move on to our loser of the week. Did you see the accounting scandal at, I'll make sure I don't screw it up, Archer Daniels Midland? That they put their CFO on active leave or administrative leave while they're looking at potentially shady accounting in one of their divisions. Again.
Shocker.
Right. And I say again, because this is the same organization that was behind the movie, if you've seen it, The Informant with Matt Damon. Yeah. I haven't seen that one, so I have to see it. And but I can picture the cover even before, as soon as I read it, where it's the cover of him and it's orange in the background.
The goofy mustache, he's great in it.
Yeah, and he looks like the biggest nerd out there. And also this one, when it's called Informant, made me go down the rabbit hole of Informer by Snow. Remember the song? Ian, can you hit me with some Informer? Informer. Don't know that song? All right, I was going to give you probably $1 million if you could give me the lyrics to the refrain of this song. And I looked this up, and I'm just I assumed you know the song, but it's fine. Don't. But it's Informer. You know, say daddy, me snow me, I'll go blame. A licky boom boom bam. Detective man says daddy, me snow, me stab someone down the lane. There's no way you'd ever get this out of this song. So yeah. Important fact, if we want to pull this whole thing, it's fine. Non-informer. There's my rabbit hole for the day. Moral of the story, loser of the week, shady accountants.
I'm so sorry. I lost the train of thought there, but hey, let's go with it.
There are older accountants out there who know this song and know what I'm talking about. And even now that I've said them, I'll give anybody a Chris Pollitt $100 bill if you ever come up to me and be able to say those lyrics to me correctly after I hit an ATM.
All right.
All right.
Well, Jeremy, before we call it a week, we got one new review on Apple Podcasts. This one was from Boldly Bliss, titled "Spit My Coffee Onto My Keyboard." 5 stars. You guys made my January. Thanks for providing some much needed levity during this crazy time of year. The bonus episode made me spit my coffee onto my keyboard. Cheers.
I love it. Thank you for having that and bringing it. That made my day. That's awesome.
Well, Jeremy, until next week, which our next episode's our Valentine's episode, and we have a special guest joining us again. So, much to come. Get excited. And everyone else, join the Facebook group. Come join the shenanigans. Jeremy, we'll see you next time.
Sounds good.